Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Depending on Tuesday's outcome, we could see different and contrasting approaches to taxes and savings that impact financial plans and planning into 2021. Joining me to discuss is Matt Berquist, Managing Director with Intrepid Private Wealth. Matt, it's great to see you. Welcome to Trade Talks.
Jill, thanks so much for having me.
And Matt, let's walk through some of the scenarios that you've outlined.
Yeah, so I think if we get a blue sweep, one, I'll be surprised if we know the outcome of the elections on Tuesday with all the mail-in voting. But that's going to be cause the most planning to be done, probably by year end. Significant changes potentially from an income tax standpoint, as well as an estate planning standpoint for clients to be, really thinking about. If we get some splits in the House and Congress, I think those policy programs are going to be a little bit less muted. But either way, we're trying to tell our clients, like, hey, listen, this is your individual plan. These are your goals that we're trying to help you achieve. We need to stay the course and then minimize taxes and minimize estate taxes as much as possible. But no reason to be, making any drastic moves. Really have to focus on the long term.
And private wealth clients are certainly going to be concerned with the impact of tax policy change. So what are you telling clients to consider for year end?
Well, I mean, really, if we end up getting a blue sweep, I think clients need to be thinking about ways to maybe bunch income into 2020 and deductions as well, especially for those making over $400,000. That seems to be the magic number. If clients are trying to deduct things above that level, in 2021, I just don't think they're going to get as much bang for their buck. So it might be a Roth conversion, it might be bunching income into 2020, or making contributions to a donor advised fund or something of that nature.
Now, I have an interesting question for you, Matt. Have you seen an uptick in clients either moving or considering moving to no state tax states?
Jill, that's a great question. So I actually live in Ponte Vedra Beach, Florida. We're just southeast of Jacksonville, and the amount of families that have moved to the neighborhood and our property markets, real estate markets, have just been on fire lately. So we're seeing it firsthand here in Northeast Florida.
Well, another question I have for you. I live in New Jersey, and of course, we're known to be one of the relatively higher tax states. How do municipalities fund themselves, or public works or so forth, if there is no state tax? How does that work?
Well, we make up for it in other ways. I mean, property taxes, things of that nature. So, we're all paying our taxes, but just at a little bit less rate. We get a volume discount because, everybody's immigrating from New York and New Jersey and California.
Yep, that is true. A couple of my friends have just moved to Austin, Texas for the same reason. Matt, it's great to have you with us. Thanks for joining me on Trade Talks.
Jill, thanks for having me. Have a great day.
All right, you got it. You too. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.